So if you've been following the San Diego housing market closely, you might be a little bit confused with the information that you're getting out of the mainstream media. So let me try and clarify a couple of things. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing market for the month of June. June's actually National Home Ownership Month. I thought this was interesting. This Gallup poll here, basically for 11 consecutive years now, real estate has been voted the best long-term investment opportunity in America. And I don't disagree. But we keep seeing things like this. This is the Fannie Mae Consumer Confidence Index, basically where 37% of people last year thought that home prices were going to go down over the next 12 months, right? Now, obviously, they're probably thinking that because last year we hit a hiccup right around August, basically where we saw mortgage rates essentially double for the first time ever in a response to the nation's, worst inflation crisis we've had in our history, essentially, right? And that was essentially due to the geniuses who run our monetary supply printing about 50% of our monetary supply in under 6 months, right? Never a good thing to do. Whenever you print more money, the money that's in circulation is essentially worth less, right? So you might see how this happened last year. However, we're seeing that these type of trends are continuing into this year, right? And I think this is directly related to the information that people get out of the media. Remember, I say it all the time that headlines do more to terrify than they do to clarify, okay? But when we take an accurate look at what's actually going on, keep in mind here that, Case-Shiller, FHFA, CoreLogic, all these numbers are slightly different because they look at slightly different parameters each. But what we're looking at here is essentially the trend, right? What we're seeing is home pricing is starting to stabilize, okay? Even Zillow shows home pricing stabilizing. Fannie Mae, same thing. This is a quarterly report. Q2 isn't out yet, but you can see the trend, right? So what I think here is going on, though, especially in the media, is they keep comparing things basically to what went on, during the pandemic. Now, I want to be, kind of conscious. I don't want to make light of this, right? I lost family members during the pandemic, and I know a lot of people died, so I want to be sensitive to that. But keep in mind, what the pandemic did was it essentially shifted people's paradigm and what housing needed to be. All of a sudden, people's home needed to be their house, their office, their gym, their school, all these other things, right? So we saw a tremendous amount of activity in the market as people tried to jockey around and get into where they really needed to be. And what that resulted in was essentially two of the greatest years, actually the two greatest years in the American real estate market, okay? And now as we start to come out of that, it's kind of, I don't want to say that market was kind of artificially created, although it definitely had, some extenuating circumstances with it. It's really not fair to compare, or actually a better way to say it is we really need to consider maybe the 5-year plan, right? So you'll hear this, throughout the media right now. Home appreciation's down. Well, it is compared to these unicorn years, right? When we look at basically pre-pandemic, though, it's kind of right where it needs to be. Same thing, pending listings, right? Pending listings are down, yeah, compared to the unicorn years, but again, pre-pandemic, they're pretty much in line. Same thing with almost every metric we're looking at, right? Yeah, showing traffic is down compared to the unicorn years. However, when we look at it compared to pre-pandemic, we still have more buyer traffic today, actually, okay? Same thing, median days on market, levels of inventory, all that stuff, even foreclosures, right? Foreclosures are up. Well, they are compared to the unicorn years when we artificially suppressed foreclosures. However, when we look at them pre-pandemic, we're still pretty much in good shape. Okay, so San Diego housing market update. I'm going to run through this a little bit quicker because I want to show you some other stuff. Okay, keep in mind that this is all of San Diego County. These are all housing types: single family homes, condos, townhomes, everything combined. And these are all median numbers, so the true middle, right? Remember, everything above the line are our lagging indicators telling us where the market's been. Everything below the line are our leading indicators telling us where the market's going, okay? So, median sales price, 825, active market time, 11 days, sold price per square foot, 561, months worth of inventory, 1.7 months. Remember, I say this every single month on these videos that 6 months of inventory is a healthy, balanced market, 7 months of inventory is a buyer's market, 4 months is a seller's market. So we're still very much in an extreme seller's market, okay? But obviously we've seen a little bit of buyer demand reduced just due to affordability of mortgage rates. However, what I want to show you is, all of these percentages here are year over year percentages. Keep in mind, we had just an incredible, thing that happened last year with mortgage rates essentially doubling, like I said, which has never happened before. And that kind of skewed some of this data. So what I wanted to show you was something that looks a little more like this. This is where I actually get the numbers from, right? This is, through InfoSparks directly from the MLS. And what we're looking at here, this is, sales price, median sales price. And I just told you it's 825. It's down 3.5% year over year, right? But look at this trend right here. See this going up? That's what we're looking at. That's an important part of which way the market is actually trending. But more importantly, the reason I'm showing you this is, if you look right here, this is a 10-year comparison. Look at where we are now over the past 10 years. Obviously, we don't see any trajectory that prices are actually coming down. Okay, same thing, active market time, right? When we look at active market time, this is again median numbers, 11 days on market. That's up 22% from where we were in May of 2022. But again, if you look at the overall trend, things are still selling faster than they have over the past decade. Same thing, price per square foot, right? Again, look right here, this trend actually going up. Yes, it's down from the peak, right? I'm not saying that it's not down from the peak, it is, but we're obviously trending up. But again, looking at the overall trend over the past 10 years, we are still in very good shape. Same thing when it comes to months worth of inventory, right? This is part of the problem. Again, 1.7 months worth of inventory, that's up 41% year over year, right? Okay, but again, keep in mind that when we look over the past 10 years, we are still in an incredibly low inventory market, and that is what is forcing prices to essentially stabilize. Okay, so if you have questions about what these numbers mean, do you want to see the numbers in your zip code, your neighborhood, what's your home worth, should I buy, sell, all that other stuff, I'm more than happy to answer any of those questions that you have. Okay, and that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.